from the blasted seas.
Recording stopped.
All right. Hi everyone. I am Black Jeff of Forex, the only one Black Jeff of Forex. And today, with you guys, I will be explaining different pairs, how I see the market, how I enter the market, and why I took gold for a buy today. Now, gold has gone to its all-time high, right? Now, I keep saying one thing over and over again, that there are three most important liquidity points in the market. There are three most important liquidity points in the market. I said that number one is the first most valid break of structure, right? I said it is the first most valid break of structure, that is what I call inducement. I didn't give it the name, right? But from the method I learned from is called inducement. Now, the second most valid break of structure, right, is called a disruption. Now, why is it called a disruption? It is called a disruption because if the market is trending, for example, let's say the market is moving like this. If the market is moving like this, a disruption simply means that this is the current flow of the market. A disruption simply means that the flow of this thing has changed from an uptrend to a downtrend internally. This is how inducement is being used. That's how disruption is being used. Now, I said that the first most valid break of structure is called an inducement, and is a liquidity point, a very valid liquidity point that trades can be executed from, but it doesn't have high probabilities. It doesn't have what's it called, high win rate. Then I said that the second valid break of structure is called your disruption. That one, the win rate is very, very high. Now, before we got this break of structure, this was what I had initially. Yeah, is a valid break of structure. Now, in one of the videos I posted on YouTube, right, or one of the classes I have taught, I talked about what makes a break of structure, right? You could have to go back on YouTube and check the video on what makes a break of structure, right? I don't want to explain that again in this video, so I will not take much time. Now, this is what we have here for this break of structure. We have this break of structure here. Then I'm explaining why I took a buy today. Then we have this break of structure here. Now, my spirit is telling me something here, that many of you here, right, know how to trade, right? The only problem you're having right now is you are being scared of taking the trade. Now, you will not be telling yourself that, I saw this thing, oh, I wish I took this trade. How you wish you took this trade? How you wish you took this trade? I want you to stop wishing, right? I want you to be confident in what I have taught you, right? I want you to be so confident in what I have taught you. So you don't have to be scared. You don't have to fear. Once you see your setup, once you see your trade, just do your thing. I'm going to be revealing some things to you guys today. I'm going to be teaching you guys some things today. Things I have not, what's it called? Taught, right? All right. So I will name it confirmation, key level confirmation. Yes. That will be that of this, what's it called? Recording. Let me write it down so I don't forget. Now, this is my first most recent break of structure. This is my first most recent break of structure, and this is my second recent break of structure, right? Now, this guy that happened here is a structural liquidity, right? This is a structural liquidity. I don't have to talk about structural liquidity today. Structural liquidity may be another day. But this guy that happened here is a structural liquidity. Now, I told you guys about key level. I said that for key level to be effective, right? For you to start using key level, make sure the market is already buying or selling from a liquidity point before you can enter the market with key level. You don't just look for key level anywhere and just jump and enter the market. If you still don't know what key level is, you will have to go back and watch the previous video I have taught on key levels. Now, this is a structural liquidity. This point here is a structural liquidity. Now, the market decided to market decided to move directly from this structural liquidity, and it keeps pushing up, right? Now, let's keep tracing the market as it is going. Now, as it is moving up, this was the first key level that was formed on H1 time frame. This is the first key level that was formed. Let me know we use this one. Let me use box. This is the first key level that was formed here. This is the first key level that was formed. Now, on this key level that was formed on 1 hour, look at now, this first key level that was formed. Now, what happened? The market tapped from this structural liquidity here, and it keep pushing to the upside. Now, we have a key level here. Look at. On this key level here would have been our first entry. Look at. On key level. Now, I've taught a video on key level. You have to go back and watch the video on key level. Look at. Keep pushing to the upside. That's giving us crazy risk to reward, but this was our first entry. Let me just take this onto this side here. These two candles form the key level. That is a resistant key level that turns support. Now the market came and tapped on it and is pushing to the upside. That's entry number 1. Now entry number 2 is this one here. This is entry number 2. Let's say that Dow that saw this guy. Now, see, I'm still saying the same thing again. I'm very sure of what I'm saying. That many of you here, okay, not say many of you, some persons here saw this trade, right? Saw this trade and refused to take them, not because they don't know key level, they are just scared. Now, Black Jeff is telling you tonight that let that fear go. Now, it may just be that you might just have to start risking $1, $2 to build your confidence, right? You have what it takes to be profitable, right? Key level entry is enough entry for you to be profitable. We also have this guy here, key level number 2. Look at the market pushed up, came and tapped into it, and is still pushing to the upside. Entry number 2. Imagine how much you would have made from this trade. Entry number 2. Yes. Oh, somebody asked me a question today. I said I was going to talk about it. He said, how do you set your stop loss? I know that many of you here may be asking that same question. How do you set your stop loss on key using key level. Now it's very simple. Setting your stop loss on key level is very simple. Now I already told you guys that the two candles that form the key level, right, put a box to cover the up and the bottom of the key level, right? Put a box to cover the top and the bottom of the key level. After you've put a box to cover the top and the bottom of the key level, your stop loss should just be slightly below. There should be enough space. It should be below the box. Look at where I'm putting my box. Now look at where this box ended now. Let me put a line now and show you guys something. This box ended here. Look at it, ended here. Now my stop loss is around here. Are you see that there is space? Your stop loss doesn't have to be too tight, that is too close to the point you are putting key level. It doesn't have to be too close, right? So you have to give your stop loss space. I'm not saying it should be too wide, but just give it space to breathe. Now that is what we have here. That's what we have here. Now the next one is this key level here. Now the two candles that form the key level. Now I want to say something now. You know the market is moving like for an uptrend. The market is moving like this one uptrend. I want to show you guys something now. It is moving like this. Now, some persons may be wondering here that are new to this class. You may have to go on YouTube to go and start watching from the first class I taught on YouTube. My channel on YouTube is I am Black Jeff, right? Currently having 70 subscribers. So that's the one you will watch. I am Black Jeff. Now we have this guy. The market is moving like this. Now, so the question some of you may be asking is, how if we have key level here, in all of these places now, which one are we going to take? Now, I've answered this question before, but I just felt like answering the question again. If you're having key levels everywhere, which one are you going to take? You must have heard of this thing that trade the most recent key level. Now, you may be asking, which is the most recent key level? The most recent key level is that key level that as the market is retracing, the one it will get to first, that is the most recent key level. That is the one you are trading on. If the one the market will get to first, if that one fails, every other one will fail. If the one the market will get to first fails, every other one will fail. So the one to trade first is the one that as the market is pushing to the upside, if it is retracing, that is, it is coming down, the one it will get to first is the one you are going to trade. All right. Having explained that, let's move on. Then we have these guys here. That was how we caught this was the second entry on SAUSD. Still pushing to the upside. Look at another crazy result. Risk to reward. Then we have another one here again. You see how you can just be getting one entry. How you can just be getting entries on just one. How you can be getting entries on just one pair, right? Now, the next thing you want to talk about is this guy here. Is this one here. This is the next key level here. Look at another key level again. Now we've gotten second entry now. Now this is another key level here. This is another key level here. Now, the market pushed up, tap into it, and is pushing to the upside. This is entry number 3 on key level. There are so many. This is entry number 3. Below the box, the two candles are taken as your key level. This is entry number 3 on key levels. Still push to the upside. Just on one pair. Now let's check there's a key level here. Okay, didn't tap. Then this is entry number 4. Now I want to give you guys, I'll give you guys another entry again tonight where you should be anticipating for a key level. This is entry number 4 here. You can see that just on one pair, you have on one pair, you've gotten 4 key levels, 4 entries already just on one pair. That means you don't have to trade too many pairs to find entry. Look at the market, tap on it and it push to the upside again. Cut this one today. It push to the upside. Now, I want to teach you guys something now today. I said I'll be teaching you guys confirmation entry. Now, what do you notice about this guy here? What do you notice about this key level here? Now, look at the 2 candles that form the key level. The 2 candles that form the key level, that is this guy, this green candle, and this red candle. These are the 2 candles that formed the key level. These 2 guys are the 2 candles that form the key level. Now, in the case whereby the candles are very long like this, how do you enter? Now, the question is, do I enter, set my limit here on the point that the key level is formed, and put my stop loss below? Would that be right? That is very risky, right? You'll be risking so much. Now, what do you do in this kind of situation? In this kind of situation, what you have to do is to wait for a candle confirmation on M5 on 5 minutes. That's what you have to do. Wait for a candlestick confirmation on 5 minutes. That candlestick confirmation is what will save you. Now, since you've gotten this on H1, the next you want to do is to go on M5. Go to M5 and find a candlestick confirmation inside that your box. Now, there's something I learned from my PA, right? I think he taught me that was like 2 days ago. I'm teaching forex, but now he teach me this one. He taught me something about. I want to teach you guys something here. I'll tell you guys what he taught me. He said, no, okay, before then, I've drawn my box. This was my box. Inside this box, you are looking for a candlestick confirmation inside that your key level box. Find a candlestick confirmation inside that your key level box. Now, look at this candle confirmation now. This candle confirmation of this red one and this green one is called the Arami, the bullish Arami candle. It's called the bullish Arami candle. It's called the bullish Arami candle. Please, can you guys still hear me? So this is called the bullish Arami candle. Now the market pushed up, came back inside of it, and push from this engulfed candle. So these are the 2 candles I use, either the Arami candle or the engulfed candle. Now, after this engulfed candle was formed, you can now enter. So when the candle that is forming the key level on H1 is very long, do not set a limit. You will have to enter with market execution. Just wait for the market to form an engulfed candle inside the box that you drew. Let the market form an engulfed candle or the Arami candle or any reversal candle you've tried before that worked is what you will use this time. Any reversal candle that you've tried before that worked is what you will use this time. So engulfed candle is what works for me. Arami candle also work for me. So find the one that is working for you and use that one. Now, how will you set your stop loss? That's another thing again. Now, you know, on this H1 time frame now, if you get the Arami candle very early, right? If you get the Arami candle very early, Now 50% of the two long candles is here. This is 50%. Now 50% of the two long candles is here. Now after you've gotten your Arami candle or your engulfed candle early in the first half of the 50%, the first space of the 50%, your stop loss will be below the 50%. Now, before, you would have been covering everywhere as your stop loss. But this time, after you've gotten your engulfed candle, just cover a little below your 50% and you will be good. I believe you guys are learning something. Just cover below your 50%. You will be good. So this is how I enter the market. And I don't have much drawdown, or I'm not risking much. Now, if you get taken out, it is fine, because the market, you can be taken out. Please don't forget, you can be taken out, but the market is still active, is still valid, because it is not, you're only covering 50% of the two candles that form the key level. So if the market comes to the second half and form another engulfed candle, you can enter again and set your stop loss now, this time below. You see that this one is wisdom. You set your stop loss below. So that is how I get my confirmation candle on any trade. When I notice that the market, the pair is very, very long, that's what I do to get a confirmation candle. So when you are taking that trade now and you see that it is very long, you can take a confirmation candle. Like, this is the next key level I'm expecting the market to get to now. Look at, there's a key level here. There's a key level here I'm expecting the market to get to now. Are you seeing that the two candles that form the key level on H1 time frame is not very long? It's not as long as this guy here. So on this particular one, I can just set a limit at this point. My stop loss is below, and I will allow the trades to ride. Do something like this. Stop loss is a little below the box. POI, TP is above. TP is above. It's just this simple. But if the guy is this long, you don't have that money to risk. What you have to do is to wait for your candle confirmation, be it Arami, be it engulf, be it pin bar, the one that works for you. Just find the one that is working for you and trade with that one. I believe you are gaining value. I believe you are getting knowledge. So that's what I do. That's what I do to make money. So that's how Black Jeff trades. So you can do the same thing and see for yourself if it will work for you. I assure you it will work for you. I assure you 100% that it will work for you. So that's how I get my confirmation. But in this case now, if you still want to risk less, you can still get confirmation, oh, right? Now, if you ask me a question now, between confirmation and entry directly, which one is more profitable? I will tell you that getting a confirmation is far more profitable. Do you know why? The reason why is because you are getting a confirmation on that limit. The market now, you getting a confirmation can still make the market go your direction. That is, after you get your confirmation, you enter. Is far more better than entering directly. The purpose of setting limits, the original idea behind the people that gave that what's it called, concept of setting limit order, is because of a situation where you will not be active, that is, you are not online, you are doing something, you're not online, then you should be setting limits. But if you are active, you're not doing anything, there's no point of you setting limits. Just wait for the market, just draw your box, wait for the market to come into your box, right? The two candles that form the key level, put a box on it, wait for the market to come into the box, wait for a confirmation candle before you enter. Your stop loss will just be below it, below your, what's it called, your box. But in this case, whereby the box is long, take half of it. After you see your confirmation candle, your stop loss should be below the box, not, sorry, below the 50%, not below the box, because you'll be risking much. Now, if you get taken out, wait for the second part of the box to get a confirmation candle. Now, I will always say something: no confirmation, no entry. So this is how to trade like a pro. This is how to trade like Black Jeff, using key level confirmation. All right. I think I will be entertaining questions now. If you have any question, kindly drop your question in the what's it called? In the comments, in the chat box. I will respond. If you have any question, kindly go to the chat box and drop your question, please. If you have any question, go to the chat box and drop your question. Or you want us to analyze any pair, go to the chat box and ask your the pairs you want us to analyze together before we call it a night. Someone said, are you not waiting for gold to retrace? Why not? I'm waiting now. Gold will retrace back to this point here. I'm waiting for gold to retrace to this point before I take continuation buy. That's what I'm waiting for. That's what I'm waiting for. How do you trade bearish key level? It's the same thing as bullish key level. The same way I trade bearish key level is the same thing it's the same way I trade um, bullish key level. Can you further explain Aramic candlestick formation? You can check online or check Candle Bible how Aramic candle look like. Let's trade a bearish key level. A bearish key level. I've not seen any pair that there's a bearish key level. You can use key levels. Can use key level on any pair. It works on synthetic. It works on crypto. It works. It works on synthetic. It works on crypto. It works on currency pairs. You can use key level on any pairs, on any market. How do I know the directional? How do I know the directional bias? Knowing directional bias is very easy. If you want to know directional bias, all you also have to do is to go on H4 time frame. Go on H4 time frame and check which. Go on H4 time frame and check where you have more break of structure. Go on H4 time frame and check where you have more break of structure. The point where you have more break of structure, this direction you have more break of structure is your directional bias. P trades, I don't understand your question. He said, can I trade with confirmation after price taps in the H1 key level? Now, the thing is this here, I'm sorry, maybe I did not tell you guys the time frame to check for confirmation. After you've used your H1 time frame to draw your box, the time frame you will use to go and check for confirmation is M5. You can go on M5 to use M5 to check for confirmation. After you've drawn your key level on H1, the next thing you want to do is to go on H5. I don't know if I said it earlier. Go on H5 to find confirmation candle that you use to enter the market. The two candles that is working for me is Arami and engulfs candle. Those two candle works like crazy. So I may have to explain both of them. Don't worry, I will explain. Someone asked me that question to explain. So in situation where price takes long week below or above the key level, then returns to go your direction. How can one avoid that situation? Okay, say so in a situation whereby price takes long week below or above your key level, then returns to go your direction. I think you can enter again. If it takes you out, it's a long week, you can enter again. This person just called my full name, Jeffrey Omorege. Say, aren't you waiting for goats to react for an inducement or disruption? The inducement and disruption is very far. The inducement and disruption is very far. How do we know when gold becomes bearish? It has been pumping for weeks. Gold doesn't be pumping for weeks. Gold has been pumping for months. Now, how would you know if ah there's something called inverse key level? It's not something I want to talk about today. And one of the key levels you were showing us was broken by the wicks. Please, which one inside? Which one was broken by the wicks? Let me know. Good evening. Thank you very much for the class. Please, I don't know if it is part of this lesson, but what can you say about valid demand zone? Valid demand zone is that same point I talked about that is a liquidity point. It's the same point it's the same thing I talked about that your liquidity points can be your valid demand zone. So at the third entry level, you didn't confirm it on H2 time frame. The clear is showing on H2. Now, now the third entry, this third entry, let me check H2. Someone said it's not showing on H2 time frame. Look at it, there's a key level on H2 time frame now. It's showing on H2 time. Look at there's a key level on H2 time frame. It's showing here on H2. This recent key level is showing on H2 time frame. If price creates an engulf candle first before Yarami, should we enter or wait? No, now you can enter with any of them. If price creates Arami first, you can enter with the Arami. If price creates bullish candle first, you can enter with the bullish candle. I mean, what if price taps on key level and the confirmation N5 doesn't form till it leaves the POI and forms outside? Oh, now look at what the person is asking this question. This is a very nice question. Pitch rate. I think I know you. I think I know you. And I've seen that name before. Pitch rate. Now, the person is asking this question. In a case of a bullish key level now, in the case of a bullish market, and we have this box here as our key level, right? You know that as the market is retracing, the market left here, and as it's retracing, you then go on M5, right? And there is no key level inside this box, and a key level then form outside the box, and you see an engulfed candle or any confirmation candle. Can you still enter the trade? Personally for me, yeah, if you enter the trade, it is a low probability setup. Very, very low probability. The best place to enter is within the box. That one is high probability. But a low probability, you can still risk little, but it is it is a low probability. It is a very low probability. You say yes, you know me, you're my student. You're my indirect student, not direct student. Said, how can one confirm whether to sell or to buy key level before trades at key level? That's the thing. You have to trade in line with the direction of the market. You have to know the direction of the market. I think you may have to go and watch my video on YouTube. In the first video, I talked about key level, or go on my X handle, go to my X page, my X. The video that is pinned, I explained key level there. You can watch it and I explain the question you're asking there. He said, are you setting a buy limit for that key level? I'm waiting for confirmation. Are you setting a buy limit? How do you determine your take profit? Now, your take profit is when you are satisfied. I've already told you how to place stop loss, right? You can do 3 risk to reward of that your stop loss, or 5 risk to reward of that your stop loss. That's how to determine your profit, or just the profit you have. If you are satisfied with it, you can close. How do you determine your take profit? The entry below, not the last entry key level, didn't show on H2. I think I've answered that question before now. When the key level fails in the H1 time frame and didn't really push through or fail in the H2 or H4 time frame, and I still use the inverse, since the rule says that when the key level fails, we stop and watch the market, what the market does. This will be out of context, but please, I want to get your view. I still appreciate. All right, he said when the key level fails on H1 time frame and didn't really push through or fail in the H2 time frame, H2 or H4 time frame, can I still use the inverse? Yes, you can still use the inverse. You can still use the inverse and see what the market will do. That's what you will do. I will drop the video on YouTube. You can go check it on YouTube. Mr. Joshua, thank you very much. All right, the last thing I will do tonight is to analyze GU. That's the last thing I will do tonight, analyze GU. All right, let me analyze GU before we call it a night. Okay. Let me explain this Aramic candle before I forget. Now, you know that this is how engulf candle work. Now, for a bullish engulf candle, right, it will be formed like this for a bullish engulf candle. That is, this candle is engulfing this one, right? For anything called engulf, the second candle, and it must be 2 different colors candle, right? It must be 2 different colors. It must be 2 different colors. That is, this one here and this one here. It must be 2 different colors. That is, we have this candle here. We have, let's say we have this one as a red candle, then this one as a green candle. We have this one as a red candle, this one as a green candle. The green candle will be longer than the first one, than the red candle. This is what an bullish engulf candle means. While a bearish engulf candle is still like this. This is bearish. This guy here is the green candle, then the longer one is the red candle. So this is what a bearish engulfed candle look like. Let me even write the name. Bearish engulf candle. Then this guy here, bullish engulf. Bullish engulf candle. This is what we have here. This is what we have here. This is what it looked like. With this guy here, let me put a text on it so you see it. Red. I'm not supposed to be doing this, oh, or don't stress me tonight. Then this guy here, green. Now, you see that I'm not giving out everything. I'm not saying some things here because I'm reserving some knowledge for my mentees, right? It should not be nice that I'm pouring out all of this knowledge for free, right? I'm reserving some for my mentees. I can't just give out everything, right? So if you want a mentorship, I offer a mentorship program, right? And is a one-on-one mentorship program, right? I'll teach you what you need to know in forex, what will make you profitable in forex, right? It's just going for $200. Now imagine I'm putting this kind of content out for free. Imagine what I'll be giving to my mentees. Red. So this is how engulfed candle works. Now for the Arami, the Arami is the opposite of engulfed candle. Arami is the opposite of engulfed candle. Now, what do I mean by the opposite of engulfed candle? The Arami, in the engulfed candle, the second one is the longest. For uptrend, for the what's it called? For the bullish and the bearish, the second one is always the longest. Why for the Arami, the second, right? Same color, okay? The second is the longest. Sorry, the first is the longest and the second is the short one. This is how the Arami works. This is how the Arami works. Here is still the red. This one is still the green. Same thing here. The second one, this is bearish Arami with this same color. You may have to go and study this thing like your whole forex career depends on it because it actually does. See the kind of knowledge I'm putting out. Free of charge. Let me write the name out. This is bullish Arami. This is bullish Arami. Then this is bearish Arami. Bearish Arami. I think I got the spelling right, but this is what it looked like. This is what it looked like. This is what bearish, this is what bullish engulf candle look like. This is what bearish candle look like. This is what bullish Arami look like, and this is what bearish Arami look like. So that is what I have here. I believe you guys are getting value. Please, you say you're going to explain. I've explained that already now. Oh, someone said I missed them up. Say I missed them up. Thanks, boss. I have another question. Even when the POI is small, do you advise to wait for confirmation candlestick? It depends on you. I just said it depends on you. You can decide to wait for you can decide to wait for candle confirmation. Is your choice. But just know that the candle confirmation is more profitable than the other. Someone said I missed them up. Please correct me if I missed them up. Boluwatife Afolabi said I missed them up. How? Abiana Kosabi again. This is bullish engulf candle. This is bearish engulf candle. This is this guy called they teach me what I know. The bullish own is the bearish Arami. Ah ah Asasa. Okay, I think I missed them up actually. Oh. No, I think I missed them up. This guy is a green. Let me wait. Oh. This guy is the red. This guy is the green. This guy is I'm correct now. Why is this guy confusing? Not me. You're the one that is wrong, sir. Go and check. I'm not wrong. You're the one that is wrong. So this is how it looked like. So this is what I'll be stopping tonight. So I may not be able to analyze GBP USD. I'm very tired. I have another class to teach. So I will say again, I want you all, there are 39 participants in this call, on this call. I want you all to go on YouTube, subscribe to my YouTube channel, leave a comment, kindly share my YouTube channel, right? I'm giving you guys free knowledge, right? And I want you guys to know that I offer a one-on-one mentorship. If you want a one-on-one mentorship, that is, you want a guide, someone that will guide you. This is not group mentorship. There are some group mentorship that pay what's it called? $200. People in group pay up to $200. I don't want to call names like Dax. Only one choose. These people pay $200 for group mentorship, right? Why some persons charge up to like $2,000 for private mentorship? You can ask Dax. He charged $2,000 for private mentorship. Why some persons charge up to $5,000 for a one-on-one mentorship? Me, I am just charging $200 for a one-on-one mentorship, just to give value, just to give knowledge. So I want you to grab this opportunity. All right. I will be ending here tonight. I remain your one and only Black Jeff for Forex. I caught tired. My mind was beating very fast. Like, did I do something wrong? So I remain your one and only Black Jeff. Kindly follow me on X. I am Black Jeff. Follow me on Instagram. I am Black Jeff. Follow me on TikTok. I am Black Jeff. My Telegram name is I am Black Jeff. Everything is I am Black Jeff. Right? My YouTube channel is I am Black Jeff. All right. So this will be ending tonight. Peace and love.